In today's video, we're going to be comparing YMAG to QQQY. YMAG is the new Yieldmax covered call fund on the Magnificent 7 stocks, and QQQY is the Defiance fund on the Nasdaq. So it makes sense that we should compare the two indexes because they're both tech related and have very large dividends. So we earn over $150,000 per year in dividends at this channel. Currently, we're at $190,000 in dividends. Living the FIRE lifestyle, which means financially independent, retire early. If you need help doing the same, email me for my EGuides at akintodd48@gmail.com. When you email me for my EGuides, I'll say something to you like, hey, such and such, here's more information on my EGuides, etc. And I'll have my pricing options below. So beware of spam, okay? The only thing I sell are my EGuides. When you buy my EGuides, you get free access to the Discord chat room for life and my phone number for life, but only until you reach 1,000 members in Discord. So please keep this in mind. If you think having my number through the ups and downs of the market is of value, please consider this point. My performance of value shows that we're beating all of the indexes again. I'm up 2.7%, but the Russell's down 3%, the S&P's up only 2.5%, and the Nasdaq's up 2.18%. We know that the Dow has been lagging, it's up 1.5%. So we're beating all the indexes, and even though today we're down $8,700, that's only 1.36%. If you look above, you'll see that the Dow is down 0.8, the Nasdaq was down 2.2, and the S&P was down 1.6. So even with a leveraged approach at this channel, even when using some margin, I'm still beating the indexes, which no one thinks is possible. Because as you know, at this channel, for every $1 you put in your account, you get $4 of purchasing power, and I just use a fraction of this margin purchasing power to get ahead. I beat the market in 2023. You can see our past videos there, and I've beat the market for the last 3 years actually using this approach with margin and dividends. See, my margin of $140,000 per year, which increased today because I added to some funds today. I'll tell you about that in a second. My dividends of $190,000 per year will pay back this margin debt in less than 1 year, and I'll be left with $50,000 cash. My living expenses are about $50,000. I'll be at about zero debt by the end of the year, and my account will be at $680,000, assuming a flat market from here. Remember a few more things. This margin is low interest debt. I've negotiated it down multiple times. So have my clients. When you buy my e-guides, you get my phone number and I help walk you through how to negotiate your margin rates down. I'm at about 6.5% interest here on my margin, so I don't mind holding this. And then when my dividends pay back my margin in less than a year, like I just said, I'll be left with all these dividend paying assets to myself. They all pay monthly cash flow, and that's how you survive and live without a 9-to-5, and that's how you also qualify to banks for loans. They won't take traded gains. They won't take Bitcoin gains. That's another thing people say. They think I'm going to blow up when the market's down. Look at a day like today, okay? We're down 1% to 2%, and again, I'm still outperforming the markets even with using this leverage. The key is tying this leverage to the indexes and using certain tricks to get ahead. The most important thing to note about these Yieldmax and Defiance funds when living the FIRE lifestyle is that they're 50% maintenance. As you can see here, even YMAG and QQQY, they're both indexed funds, but they're still 50% maintenance. You would think that stocks like Coney or Square would have 50 to 100% maintenance, but the funds like YMAG, YMAX, or QQQY are lower maintenance, but they're not. So if you need help understanding maintenance, that's in my Volume 3 Margin E-Guide. Maintenance is the secret to everything, even if you're not using margin. When you're trying to withdraw freely from your account, you have to have low maintenance names so that you can have as much equity as possible to withdraw from. So the first thing I noticed about YMAG is that it's equal weight with Tesla. If we go to the YMAG Holdings here, you'll see that the weightings here are all around 14%. So 14% across the board, including Tesla. I think we can outperform the markets through the yield alone of Tesla, but I also think we can outperform the markets simply by matching Tesla to the S&P 500 index. If you go to the Zacks website here, you'll see that Tesla is 1.75% of the index, okay? So with Yieldmag, with YMAG, you have Tesla at equal weight. Here in the S&P, you have it at 1.75%. And I'm always trying to beat the indexes. So this is how I think we can outperform the markets. Even though Tesla is about $8,000 in my portfolio, it's still in line with what it is in the S&P 500 index. I don't have it at 15%, and that's why even when it was down today slightly, it was down fractionally because it's been down lately, and so I think its valuation actually gave it some support today. Even though it was down today, again, we're still down only 1.36% because we don't have it at 15% of the portfolio, okay? So even though Tesla is a larger holding of mine because the yield compensates me for the risk and it's a major index holding, I'm still underweight in Tesla compared to what the YMAGs are. I get why YMAG does this. most likely to eliminate the guesswork and give equal exposure to all themes. But for my risk tolerance and performance needs, I'm staying with an index-weighted approach in Yieldmax funds to both manage risk and potentially outperform the markets. These overweight holdings of mine in Tesla and Coney also allow me to track ARK funds better and therefore the Russell 2000 index better. ARK hasn't been struggling by itself. All small caps have been down. See the Russell index and let's say ASG if you don't believe me. These small cap indexes have been down, so that doesn't mean that ARK or OARK is doing poorly. I think it's just a function of higher rates hurting things like bonds and small cap because they need lower interest rates to support their business models. So through Tesla and Coney matching ARK better, we can mimic small cap performance better too, because these are all simply risk on plays that will start working better when rates start falling again, in my opinion. So the Russell, along with bonds, are probably an important asset class to keep at the moment if you're dovish on interest rates. That's why I have so much in IWMY, okay? It's another cheap Russell play, and it's been outperforming for us. Look at these Defiance funds, okay? They've been incredible, okay? We're actually at a break even for IWMY, even though the Russell index has been down. We're almost flat in JEPY, and QQQY, we were actually positive in yesterday, but because of the spill today, we're now down in it fractionally. But look at it, it's still only down 1.66% today, whereas the Nasdaq was down 2.23%. So we've been in these Defiance funds since October. So that's October, November, December, and January. So we've collected about 4 months worth of dividends. Each month was about 6 to 8K in dividends. So you do the math on that, that's about $25,000 to $30,000 that we've made in these Defiance funds. When I tell people in the world about retiring now with Defiance and QQQY, they just look at me funny, like they did when I mentioned Cornerstone and using small amounts of margin. It used to bother me, but now I just have to laugh at it. Imagine that, okay? One click of a mouse with one ticker symbol and you can buy your financial freedom and nobody listens, okay? Knowledge is clearly power and ignorance is bliss. In fact, Defiance is working so well for me, I'm going to have to start giving out their shirts along with my shirts. I'm going to have some merchandise coming out soon, and when you buy something of mine, I will send you a free Defiance shirt. So email me or DM me on Discord if you want to reserve a shirt, as I will have limited quantities of Defiance shirts available to throw in with the order. And again, the funds are actually working for us. They aren't just some 50% dividend vehicle that's returning your own money to you, which is fine, by the way, because you still cash flow that way over time. Even if it's just returning your money to you and you're dropping by that equivalent amount, you still cash flow that, just like I do with Cornerstone every day. As you can see, Cornerstone, it actually outperformed once again. 0.97 and 0.56 were down today. So, you know, in Cornerstone's case, I get a lot of hate for this because they say it's just returning your own money to you and it's going down on the chart. Well, you have to learn how to play Cornerstone properly. You have to time it around its rights offerings. There's a reason why Cornerstone is a 4-star fund and it beats the S&P over the last 10 years, okay? It has a 21% dividend, and that dividend that they have drips down at the NAV every month. So it's free money. It's the only vehicle I know of that drips the 21% dividend down at the NAV, okay? So I just dollar cost average with Cornerstone through dripping at the NAV, but with Defiance funds, I don't drip the NAV. I just wait for a big market dip like we got today. So with QQQY, I added 3,000 today and got it back up to 60,000. I rebalanced my position back to 60,000 because that's how I'm getting ahead in Defiance, is I use market dips to drip, whereas in Cornerstone, I use the special drip at the NAV to dollar cost average my position and get ahead. But again, time Cornerstone around its rights offerings, okay? Many closed-end funds like Cornerstone, USA funds, like I mentioned yesterday, Go, they have rights offerings. So you're going to look at the chart and say, why are you in these funds? They go down over time. The dividends go down over time. No, they don't. You have to sell when the stocks are up, when the funds are up. You sell when the premiums are high, and then you reload after the rights offerings, okay? They tell you when to sell. It's an incredible opportunity. You shouldn't be scared of rights offerings. You should welcome them. And when you buy my e-guides, you get free access to the Discord chat room, and that's where we alert you of the Cornerstone rights offering announcement. That's why Discord was started. It was for the Cornerstone rights offering announcement. And then we got it to where you could follow my portfolio there when I'm not making videos on YouTube. And then it expanded to all these other channels. We have a Defiance channel, a Yieldmax channel, Bitcoin, a brokerage-specific channel who can tell you who has the best maintenance levels and who has the special drip for Cornerstone. So with Cornerstone, remember, you have to time that fund around its rights offerings, and that's what my Volume 4 e-guide instruction on how to do. And when you're dealing with Yieldmax and Defiance funds, be aware that they are 50% maintenance at E-Trade. Now, you could switch brokers and go try to find lower maintenance elsewhere, like at Robinhood or Interactive Brokers, but they don't have the special drip for Cornerstone. And you need Cornerstone for your growth and dividends. You need Defiance for your all-around dividends. And then you need Yieldmax funds like YMAG and these individual stocks that I have at about 1,500. You need these for some growth that you trade around. You rebalance and trade around this. You trade around your core positions in Yieldmax, and then you just collect those large dividends in the meantime. Also, remember one more thing about return of capital. When funds like Cornerstone are giving you dividends and supposedly returning your own money to you, this means that it's tax-free. ROC is tax-free, and so that's how I see it if the NAV is growing. It's always good return of capital if the NAV is growing, and with QQQY and YMAG and even Cornerstone, okay, these funds have their NAVs linked to the indexes, so their NAV should always be growing and support that dividend, which even if they give you return of capital, it just means it's tax-free. One last thing to note about Cornerstone is it's 30% maintenance, and that's why I put about 400 grand in Cornerstone, okay? Cornerstone up above, as you can see, about 400 grand, okay? And it has 30% maintenance, so that's why I park most of my cash there once again. So in conclusion, I like both QQQY and YMAG. Both funds offer different looks on tech that can be up when the other is down on any given day. For example, sometimes large caps and FANG can be up when the market's down. And sometimes FANG can be down when value stocks in the Dow, for example, are up. If you need more help understanding what Yieldmax and Defiance funds do, you can either see my past videos or check out our Discord channels where we have channels dedicated to Yieldmax and Defiance, as I was mentioning earlier, and we have almost 1,000 members at Discord, many of whom are highly intelligent, affluent investors who can share with you their experiences with these funds as well. Many of the members there have much larger accounts than mine and use all kinds of strategies beyond what I can do there. So you might find that interesting. Also, again, beware of spam. The only things I sell are EGuides, which look, again, something like, hey, such and such, here's more information on my EGuides, and my pricing options will be below. And when we reach 1,000 members in Discord, Discord will still be free for some time, but I'll start charging separately for my number. So if you think having my number through the ups and downs in the market is of value, please consider this point. All right, and if you like the video, click like or subscribe, and I'll talk to you soon. Thanks.